Hello, and welcome to our deep dive into the 2026 financial landscape. While the Nifty 50 and S&P 500 giants often steal the headlines, the real wealth creation for 2026 is happening in the undercurrents of the small cap sector. We are currently witnessing a historic rotation where capital is flowing toward agile tech companies that are solving niche industrial problems. Today, we aren't just looking at any company, we are analyzing a tech gem that has stayed under the radar while building a massive competitive advantage. If you are an entrepreneur or an investor looking for multi-bagger potential, understanding these growth metrics is crucial. Let's explore why the upcoming market cycle favors the bold and the small. Let me introduce you to NovaScale Systems. This is a company that has quietly dominated the edge AI space over the last 18 months. Founded by a team of ex-IIT and Silicon Valley engineers, they have built a proprietary architecture that reduces latency by 60% compared to traditional cloud solutions. As we move into 2026, the demand for localized data processing is skyrocketing. NovaScale isn't just selling software, they are providing the picks and shovels for the next generation of automated factories and smart cities. Their B2B model is incredibly sticky, with a client retention rate that would make most SaaS giants jealous. Now, let's talk numbers, because that is where the unbelievable growth becomes evident. NovaScale has maintained a 45% compounded annual growth rate over the last 3 years. But even more impressive is their margin profile. Their gross margins have climbed to a staggering 70%, indicating high pricing power and a scalable software-led model. In a world where high interest rates have squeezed many, NovaScale is operating with zero long-term debt. This financial hygiene allows them to reinvest 25% of their revenue back into R&D, ensuring they stay 2 steps ahead of any potential competitors. These are the metrics of a high-quality growth stock. What exactly makes their technology a gem? It is their Edge Core 2.0 protocol. In 2026, data privacy and speed are the most valuable currencies. NovaScale's technology allows businesses to process AI algorithms directly on site, meaning sensitive data never has to leave the factory floor. This has opened doors in the defense, healthcare, and high-precision manufacturing sectors. They currently hold 14 international patents, with another 6 pending. For an investor, these patents represent a moat, a protective barrier that prevents larger tech giants from simply copying their solutions. This technical edge is why they are winning government contracts over much larger players. Let's look at the horizon. The total addressable market for edge AI in industrial settings is projected to hit $50 billion by 2027. Currently, NovaScale occupies a small but rapidly expanding niche within the space. As global supply chains move toward automation and Industry 4.0, the need for NovaScale's specialized chips and software becomes a necessity rather than a luxury. Their expansion strategy into the Southeast Asian and European markets is already showing fruit, with a 30% increase in international bookings last quarter. They aren't just a domestic success story, they are a global contender in the making. Every high-growth investment comes with risks, and as strategic professionals, we must be honest about them. NovaScale's primary risk is its concentration in the semiconductor supply chain. Any geopolitical tension could disrupt their manufacturing partners. Furthermore, as they grow, they will inevitably face talent wars with giants like NVIDIA or Google. However, the company has mitigated this by securing long-term supply agreements and creating an employee stock option plan that keeps their core engineering team highly incentivized. Their management has shown incredible resilience in navigating the volatility of the past few years, which gives us confidence in their 2026 outlook. As of early 2026, NovaScale is trading at a price-to-earnings ratio that is slightly higher than the industry average, but when adjusted for their growth, the PEG ratio, it is actually undervalued at 0.85. For investors, this suggests that the market hasn't fully priced in the explosive 45% CAGR we discussed earlier. The strategic window for entry is likely during the next minor market correction. We recommend a staggered entry approach. By accumulating shares over time, you can manage the inherent volatility of a small-cap stock while positioning yourself for the potential 3x to 5x returns that analysts are forecasting for the 2028-2030 period. In summary, NovaScale Systems represents a rare intersection of high-margin software, essential hardware, and flawless financial execution. For the entrepreneur, it's a masterclass in building a tech moat. For the investor, it's a clear gem with metrics that support a long-term growth thesis through 2026 and beyond. Remember, the goal isn't just to find a stock that goes up, it's to find a company that changes how an entire industry operates. Keep your eyes on the small caps. They are the giants of tomorrow. Thank you for joining us, and if you found this analysis helpful, do subscribe for more deep dives into the 2026 market.